Today we are talking about a massive amount of money raised for Australian tungsten producer EQ Resources. Here to tell us more is Craig Bradshaw, the Managing Director. Craig, how are you today?
Good, thank you. Thanks for having us on.
Now, I too would have a smile on my face if I just raised $34 million for what you're working on over at EQ Resources. Now, I see that this was oversubscribed and more than the initial amount that you asked for. Can you take me through some of the details of this placement?
Yeah, sure. So we went to the market to raise 25 million. We had more than that come through in terms of the book, and then we ended up settling and for 34 million from the raise. The purpose of it, we'll look to pay down some overdue trade payables. We had 6.8 million due to a mining contractor, 4.2 million in convertible notes that we'll look to settle, as well as settling some of our Spanish debt as part of the raise, and at the same time bolster our working capital requirements. So as a result of raising 34, we'll have about 20 million in the bank. That's more than enough to cover us from a risk perspective until both assets are in full production. Our asset in Spain is already in full production. Our asset in Australia, Mount Carbine, is currently processing low-grade stockpiles, but come the end of January, we'll be into the Iolanthe vein system, having moved 1.3 million tonnes of waste. And that vein system's about 1.6 million tonnes of 0.264% tungsten. So from about February 2026, that asset will also be positively generating cash.
Now, Craig, you've hinted there at what some of the funds are going to be used for, but with an equity raise like this, tell me, have any major shareholders or cornerstone investors increased their position in the company?
Yeah, look, good question. We've seen solid support from a range of new investors, but also solid support from existing investors who had invested previously. Companies like Parla Investments, APAC, Ryan, Regal, all followed their money from the previous raise. Equally, Oaktree converted their unsecured pre-royalty loan into equity to maintain their equity stake overall in the company. So we were pleased with the fact that we had strong support from existing shareholders increasing or maintaining their stake.
And finally, with the equity raise done and dusted, what's ahead for EQ Resources?
Yeah, our focus is on ensuring that both assets got a solid foundation and that we deliver them both into solid production. Our Spanish asset had record production in October of 120 tonnes contained in tungsten. We expect that to continue at those type of levels, and ideally target that 120 to 140 tonne a month. Our Australian asset, we do have a large waste removal that's currently being undertaken to access the Iolanthe vein system. We expect to be through the waste movements to access the Iolanthe vein systems by the end of January, and from there then production will steadily ramp up at our Australian assets. On an annualised basis, we're probably number 2 in the world at the moment outside China in terms of production. As we move forward into next year, we expect to be producing around 3,000 to 4,000 tonnes a year of contained tungsten in concentrate. That would make us the number 1 producer in the rest of the world. And that's where our assets should sit. They're good assets, good deposits, excellent processing plants. And so that's where we want to position it. And at the moment, we could sell 5 to 6 times more than what we produce from a sales and a market perspective. And the prices are sitting at around $740 to $780 an MTU per 10 kilogram of tungsten in APT. And so we've got excellent prices, solid market fundamentals, and the onus is on us in getting our assets to their full potential, which we expect to achieve through 2026.
Listen, Craig, thank you so much for today's update and congratulations on this very impressive equity raise. It was a pleasure speaking with you and I look forward to future updates.
Thank you very much, and thank you for your listeners. I appreciate it.